Welcome to Stylist Soul Tribe Conversations. I'm your host, Lisa Huff. Over the last 5 years, I've coached hundreds of hairstylists and beauty industry professionals, helping them work their dream schedules exclusively with their dream clientele and earn their dream income, all while fostering genuine connections and lifelong friendships inside the beauty industry. In this podcast, we dive deep into abundance, manifestation, business building strategies, and creating a life that you are truly proud of, both behind the chair and at home. Are you ready to embark on a journey of personal growth, success, and sisterhood? Then hit that subscribe button now and get ready to experience the pure magic of Stylist Soul Tribe Conversations. Hi friends, welcome back to Stylist Soul Tribe Conversations. Today I am joined by Paul Neal, a financial strategist and author dedicated to transforming the way entrepreneurs view commercial property. His book, Unleash Your Business, Unlock Wealth, Autonomy, and Control by Buying Your Building and Firing Your Landlord, offers a new perspective on achieving autonomy and wealth. Hi, Paul. Thank you so much for coming on the podcast today. How are you?
Hello, Lisa. I'm doing great. I appreciate the opportunity to chat today.
Yeah, absolutely. Paul and I were talking just very briefly before we hit record. I just received an email from Paul's assistant. This is clearly part of his awareness strategy. He just reaches out to people, that are speaking to business owners with physical buildings. So I don't know, Paul, we're going to be getting to know each other during this episode, but I told him before I hit record, this is something that I have personally thought about for many years. There's been multiple different properties that I've considered opening a salon in. I've never known if it was the right move. Personally, I'm very intrigued. All the properties that I have found have had a commercial element with a residential dwelling attached. That seems very attractive to me. So I'm going to be just like a curious little sponge during this conversation. I'm going to ask my own questions that I have. I also got on my Instagram story this morning and asked if you guys had any questions, and I did get some questions for that as well. So we're going to pick Paul's brain and hopefully gain a lot of clarity during this episode. Paul, tell me a little bit about your background story, who you are, where you're from, how you've become the person you are today.
Yeah, well, I'll skip the first few years of my life, but I'm based in Virginia, live in Virginia. I spent most of my life there. I'm an entrepreneur by training. Well, by trade. My training is more engineering. That's what I went to college for. But I started a first business in college, and I'm now 6 businesses later. So I know.
Mind if I ask what that first business is? I'm just curious.
Oh, that was a marketing business. I went in with my sister and brother-in-law, and it was a lot of fun. Through all those experiences, I really developed my tribe of friends and clients and so forth. They're kind of crossing the blurry boundaries there. And most of them were business owners, entrepreneurs of some type or another.
Okay.
And a lot of my businesses were in or around real estate financing. And I think I funded the first real estate transaction in 1998. So been around the block a little bit on the residential side and the commercial side, and have had businesses in both spaces. What became intriguing to me is I love investment real estate. And what I noticed with a lot of my clients in Spear were essentially 2 types of business people. One that they were both heads down and successful in growing their businesses, but you had one group that was sort of so heads down and focused. They were just focused on building the business itself, and they would have a space for their business, and they go from lease to lease to lease, and kind of time would go by. They'd get a lease renewal and they didn't really have time or the energy or know what to do anything about that. And so just sign the lease and then move on. And then the other group was similar, but at some point in the process, they slowed down enough to take the dive and buy the actual real estate that they ran their business out of. And what became interesting to me is the divergence of the 2 groups from a wealth standpoint over time, because I started to realize, well, hey, the business owners were, and I get people all the time asking about investment real estate, and so many of them are business owners, and I have a podcast on that. We sort of talk to business owners who are investing in real estate, but so many of them don't even think about the real estate that they walk on every day, and they run their business and they lives in it. And so they're going out after all these other opportunities. And I'm like, okay, those are all great, but have you considered, buying your space? Because it's really a passive investment. Your business is there anyway, and there's tremendous benefits to that. And so I became intrigued in that, and we specialized in that, and wrote a book about it because I found a lot of people just didn't know the questions to ask, where to go. I mean, the process is completely different than buying residential real estate. It's more like the Wild West compared to, You
Yeah.
go buy a home, it's pretty plain vanilla. It's kind of the same process, whether you go to a bank or a mortgage broker, it's pretty much the same rules, rates and programs are about the same. Not the case on commercial, completely
Okay.
different animal. So anyway, that's what we do. And that's what we're excited about helping business owners grow that wealth and passively basically take one business, turn it into two, and realize some of the benefits there.
Awesome. So I'd love to know percentage wise. I'm just curious. I'm just thinking of all the salon owners that are even just inside of my membership. How many would you say in whether you're coaching or, consulting, that you do recommend they go for the property that they're currently in, or just take their business and put it under another property? Because what do they do? I mean, do you wait for the building to become available for sale? Is that something that you recommend they just bring to their landlord, or how do you coach people through that?
Yeah, I think that's a great question, Lisa. I think it starts with determining whether or not you're in a position to do it. So
Okay.
the question number one is just some basic check boxes are, have you been in business for 3 or 4 years minimum? Do you have a track record of growth and
Mhm.
profitability? If you're a locally based business and you have clients or patients, are you getting repeat business? In other words, is this
Mhm.
growing? Can you project into the future that you're going to be stable or growing and that you're going to be in the business for a while?
Mhm.
So those are all sort of the minimum hurdles you need to cross to make sure if you're a brand new business or a brand new salon, probably want to focus on getting your business running, figuring out your marketing plan, hiring your team, putting systems in and all that. And then once you get all that in and now you've got a track record, you've weathered a few storms, now
Mhm.
it might be time to start thinking about buying a building.
Yeah.
Okay. So then you have this other question of if you're in a space already, as most people are, you do have a lease. And in most cases, sometimes it's a 3 year, 5 year.
Yeah.
I was talking to one yesterday, they signed a 10-year lease, which is
Wow.
wow. She said, yeah, she's an attorney. She's like, yeah, it was 10,000 a month. It's like, I'm committing over $1 million in lease payments over 10 years.
Property paid for by then.
So you need to kind of determine how far out are you from lease renewal. If you're within 3 months, then it's really not a lot of time to really go down the commercial
Okay.
property road unless you feel like you can negotiate a month to month renewal or maybe a short term renewal, like a 6 month or a
Fair.
12-month renewal, because
Mhm.
it's going to take some time. Now, determining whether you stay in the building you're in and make an offer on that or going somewhere else is also dependent upon a couple things. One is, again, are you in the right area? Are you where you want to be? Is this where
Yeah.
your client base is? Is the current space large enough for your projected growth and where you want to go over the next 2, 3, 4, 5 years?
Mhm.
Would your landlord even be willing to sell the space?
I'm curious, in your experience, how many times the landlord actually is like, "Sure, let's do it."
Well, it depends again, but it happens. It's more frequent than not. Someone
Okay.
taught me a long time ago. They said, if you don't ASK, you don't GET. And
Mhm.
so there are a lot of investment real estate owners that are in it for different reasons and there are different stages of their lives. And so we talk about the silver wave of people retiring and selling businesses, for instance, that's happening a lot today. Well, you may have a landlord that's sort of in that situation. Maybe
Mm.
they want to go to some, their dream location they want to move to or whatever.
Yeah.
And they are interested in selling, but they like the cash flow because they're not sure what they do with the big capital gain. You can approach your landlord and say, hey, I'm thinking about buying a space. I love this space. I'd love to know if you ever consider selling it. Or if you do, maybe give me the first right of refusal or opportunity.
Yeah.
And you would be amazed that a lot of them might say yes, if not today, then sometime in the future. And you've at least
Mm.
planted a seed of opportunity in their ear. And a lot of times they'll structure it where they'll even do the financing. You can structure it, which is
I
the
have
best way
heard
to.
happening. Okay, so you're a fan of that.
Oh, I'm an absolute fan of that because generally when a seller is looking to sell and they're willing to finance, what they're telling you is that they've got a nice asset with a lot of
Mhm.
equity and they love this idea of cash flow. And so if you sign like, we would almost call it a rent to own, but you're
Yeah.
buying the building, they're financing it. They're still a lien holder. So if you default, they get the property back.
We're renting from them again.
It's like that's right. And so they've got this cash flow for, maybe there's a 5 year term on that. And then at that point you have to get your own financing or whatever, but some period
Okay.
of time, which would allow you to build some more equity in the property and do some things. Well, another example, friend of mine, Kathy, she's an OBGYN. She just recently sold her practice, but she's still working in it. She's not quite ready to retire. But she had built this local practice and they bought their building 15 years ago, paid it off in about 12 years. One of these larger medical practices came and said, "Hey, I want to buy your practice," because they're consolidating, you know. And so she sold the practice. And because all the patients come to that building and all the employees and staff come to that building, they're like, "Well, we don't want to move the practice. We
Yeah.
want to keep it where it is. So can we just write you a rent check every month?" And so in this case, you know, she's renting back the building that she owns to them. So sometimes your landlord will be willing to negotiate with you. You just have to ask. And again, ask early, because if you think you're 2 or 3 years out,
Plant
they
that
might not be
seed.
ready today.
Yeah.
But it saves them a lot of money too, because if they don't have to get a real estate agent involved and all the commissions and everything, then it's a win for everybody. So, and if that's not the case, then you have to determine, you know, do we move somewhere else? Do we start looking for location? Do we build something? You know, and there are other questions.
Love to hear your perspective. Obviously, you're clearly passionate about this. If you've wrote a book about it, this is now your business. But like, how adamant are you that somebody does, if the landlord isn't interested in selling the building? Like, I'm thinking of somebody inside my membership, for example. She's owned the same salon for 30 years now. She's been in business and she still rents the building.
Yeah.
She just came up on lease renewal and she was very annoyed because the CAM fees went up, the garbage fee went up. But there's also this restaurant that's in the same strip mall and they're using way more garbage than she is. So she was negotiating that. And I'm just curious from your perspective. I'm 31 right now, but as I go through my whole career, like, would you say someone in that situation, 30 years of ownership, in your perspective, would you say get a different building and get to the point where you can own that property? Or for some people, it works to lease forever?
Well, I would say if you're already in it 30 years, the question you have to ask yourself is how much longer are you going to keep the business, right? I mean, if you're going to keep the business 5 or 10 more years, then it may make sense. If you're going to be punching out the next couple of years, probably not. But again, if you take a look at this example, and it's kind of a sad one, and it's one of the reasons we wrote the book. We talk about unlocking wealth, autonomy, and control. Right here, we're talking about she's given up as a tenant control because she has no control on the lease renewal rate. Or not, they're either going to renew the lease, which I get called all the time, like, "Hey, my landlord's not renewing the lease. They're going to sell the building and somebody else is coming in and taking the space." And now they're in a panic to try to do something. And you can imagine trying to uplift your business in, you know, 60 days, relocate it, let all your clients know and your staff, you know, and hopefully you can move close enough that, you know, it doesn't disaffect people. And now they're going to look for somebody new to be their service professional. So 30 years, I mean, you know, you look at, wow, I mean, there's no guarantee that real estate prices will go up tomorrow. It's obviously in the short run, it's always a little up and down, right? But 30 years, right, of the long run, or even 10 years, right? If you look at personal residences and commercial space. So now she's made lease payments for all this time and she's had no tax advantages on that. She's got no appreciation on that. And so she closes the business or sells it at some point. And so she'll hopefully make some money on the sale. But she could be like Kathy that sold her practice. And now she has a building that was worth a couple of $1,000,000 today. She gets a 5-figure check every single month from the new owners of the business. Or if she just decides one day, I want to sell this thing,
Just
I can
cash out.
sell it, cash out. And she could use the 1031 tax exchange and put it into other real estate to defer taxation. She could pass it to her kids. And when they receive it through inheritance, as the law is currently written, then they would receive it on a stepped up basis. And they would now have this asset that just, you know, is worth, you know, tremendous amount of money. So I think it's a travesty to get into a locally based business and not be thinking about the real estate if you've got a long run ahead of you.
Yeah.
Because of that, all of the opportunity cost. I mean, she's cost herself so much wealth and opportunity. And we see people that as that wealth accumulates in the building, you have a forced savings program because now, just like on your personal residence, every time you make that mortgage payment, some of it's going to pay down the equity, even the loan, even if your property doesn't appreciate. And the other thing is, as this equity increases in the building, now you have your own sort of savings account, your own bank. So if you have an opportunity, maybe you want to buy another salon, you want to grow your business that way through mergers and acquisitions, or you want to expand, you've got access to all this capital right there. It's yours that you can deploy tax-free. Or you could take it out and buy other investment real estate. And because you're
Mhm.
borrowing it from yourself, it's tax free as opposed to capital gains.
And when you're referring to that, just because I'm worried this is going to go a little over the head of some people listening, are you referring to just like a refinance in that case? Okay.
Yeah. Or a line
Having
of
that equity,
credit or
it gives
refinance,
you,
something like that.
yes, HELOC, something like that. So you can kind of borrow against that equity that grows over time. So going back to that previous person, for example, being 30 years into business, we also have a lot of people who are going to be listening to this who are maybe on, you know, been a salon owner for 5 years, 2 years, in the midst of opening their own salon right now. Is there a sweet spot? I know you said obviously don't go fresh into business. Let's
Mhm.
have some proof of concept here that this is going to work for you. What time frame do you feel like people should really start thinking about that?
Well, I mean, as early as possible in your strategic plan and your vision,
Okay.
where you're trying to go. But from a practical standpoint, once you've been in business 3 to 4 years and you've got a pretty solid foundation, you feel good about it, your numbers are looking good, you're
Mhm.
profitable, and you're like, okay, I think I got a handle on this thing, right? And, if you've in it for 3 or 4 years, then you've probably grown to a point where you might be sort of coming up on the wall in your current space anyway,
Yeah.
or you're coming up on a lease renewal type situation. And so you might want to start thinking about when lease renewal comes up, instead of signing a 5-year lease or
Mhm.
something, you might want to think about maybe a 2 or 3 year lease so you can be in a position
Start to
to,
do the planning for that.
yeah, exactly. Because the timeline on something like this is not short
Yeah.
generally.
Totally.
Yeah. So, I mean, from the beginning, getting your financial house in order, getting all the documents, things together, that might be a 30, 60, 90-day process based
Yeah.
on how organized you are. Once you get to that point and you sort of determine what you're capable of buying, not that you would necessarily buy that much, but
Yeah.
capable, right?
Yep.
Then it's now engaging with, an expert, a commercial real estate agent in the area who knows the
Mm.
market.
Mhm.
Commercial realtors they're totally different than residential. They're both great people, but it's generally
Mhm.
a much smaller universe of people.
Interesting.
And yeah, and
Mhm.
like commercial properties, there's no real Zillow for commercial properties. You're not going to
Mhm.
sit at home,
Yeah,
after
there's
work and like,
LoopNet, but I agree. It's hard to find the one property. I live in a very small town, but the one property that was for sale, the only way you could find it is from that Coldwell Banker's office
yeah.
website. Like if you Googled that address was the only way you could find it online, or if you drove by it.
And so many commercial deals, Lisa, are off market. So they
Mhm.
know, because the commercial agents not just sell properties, but they also lease properties.
Yeah.
So they have their thumb on the market and they know, okay, well, this company, their lease is coming up in 6 months and we think that they're going to be moving somewhere else. And they also know where the new development, they go to all the town council meetings. They know where the new
Yes.
developments are being approved, even though they may not start for 2 or 3 years.
Yep.
So it's way ahead of the general knowledge. They're like, okay, well, if you want to put your salon in this up and coming area, we're going to put this nice new outdoor retail place. It's
Yeah.
going to be awesome. And so now you can start thinking, okay, they can help you to do that. And it might be to the point where you might be looking to build something that fits
Mhm.
your specific
Totally.
target. Once you determine that, you either finding that property could be 30 days, could be 6 months.
Yeah.
Once you actually go into contract, now we're going to do the loan. Now it's another 90 days before you close.
Yeah.
So you figure it's
Takes
six to
time.
12 months to
Okay.
this process to take place. And if you're going to build, add another 12 months to that. So 18 months, maybe, if you're going to build. So you got to do some, and this is why a lot of people don't do it, right? Because
Yeah.
they're, again, heads down in the business. They're not thinking about it and they may think about it when the lease renewal comes up and they just got a 10% increase on renewal
Yeah.
because the area is improved and like, well, we can
Mhm.
rent it for a lot more.
Yep. Wow, that's fascinating. Okay, so let's take it back to like the level of someone is hearing this for the first time. They're either have been a salon owner for that 3 to 4 year period, or maybe a little bit longer, and they're starting to really think about the investment side of this. I know you said there's a couple different routes you can. So you would say ideally you prefer financing through the property owner, or would you say just get your ducks in a row with that and with lending agent and go that route?
So it's quite a bit different than residential. So
Yeah.
yeah, if you can I tell people there's 5 ways to buy a commercial property.
Okay.
One is cash, which most
Mhm.
people don't do. The other is seller financing, which
Okay.
again, if you can get it, it's generally excellent.
Okay.
The third one is what most people would be familiar with, and that's conventional or bank financing.
Yep.
So what happens is you're like, okay, Lisa, you go to your husband, you're like, hey, we think about buying this building. And you set your business up with, Mary Jane, the banker 4 years
Mhm.
ago, and you've got this
Mhm.
relationship and now
Mhm.
you're running all these deposits through your business and all that. So you and your husband kind of saunter down there and see Mary Jane. You're like, hey, you want to buy this building? And so Mary Jane says, okay, here are the terms. We're
Mhm.
going to want 20 to 25% down.
Yep.
We're going to put you on a 5-year fixed rate balloon payment with a
Mhm. I've heard
20-year
that.
amortization.
Yep.
And we're going to want to review your financials every year to make sure your business is still doing well.
Okay.
So you look at your husband, you're like, oh my gosh, this $500,000 or $1 million building or whatever we want to buy is going to take $100,000 to $200,000 in
Mhm.
cash
Mm.
just to get in the door. And it may be in your business, but you're like, do we
That's where
really want
some
to take?
people get stuck. Yeah,
No, particularly for a growing business because
totally.
your business is growing, it's eating cash,
Well,
right?
and as soon as you get in too.
Most people end up at that point that they say, maybe sometime we'll do it in the future. And they just kind of turn around, go back, and then they sign up.
Yeah.
Life goes on. So the next way is through private money. There are private funds, private investors, joint ventures, insurance companies. There's a lot of ways to get money in the private market. And that happens a lot for people that may not have all of their ducks. They have a
Mhm.
credit issue or
Mhm.
something. Sometimes the best methodology that we generally recommend when it makes sense is the SBA. The
Mm.
Small Business Administration has a couple of programs. They've got a
Yeah.
7A and a 504, and they don't loan money.
Mhm.
They do guarantee loans. And so they'll guarantee loans, banks, private lenders, non-lending institutions,
Okay.
non-banking lending institutions. And so they have both of those programs have their pluses and minuses. But what most people don't realize is when it's done right, there are certain investors out there that have the delegated authority by the SBA to basically sign off on the deal. It's just as easy as getting a bank loan, but instead of coming up with 20 to 25% down, you're looking at 0% down in some
Mm.
cases, most typically 5 to 10%, but that makes a huge difference in
Totally.
cash flow. You can generally include those renovations and build out as
Uh-huh.
well. So you're not
Mhm.
having to, belly up to the bar for that
Yeah.
money in addition to your down payment. The terms go out much longer, 25
Mm.
years generally. And in some
Mhm.
cases, you can get a fixed rate for the entire term. So more like what you would be used to when you go to buy, your personal residence with the lower down
Mhm.
payment, the longer term and
Fixed.
the fixed
Uh-huh.
rate and that sort of thing.
Are you for or against that?
It depends on the situation, but
Yeah.
what most of the time we like it because we're advocates of having people keep a lot of cash on the sidelines
Mhm.
because you can use it for growth. You might need it for payroll, just working capital type thing.
Mhm.
And just because you have it doesn't mean you should use it,
Totally.
right? And stick it in the bricks and mortar. So if it makes sense, if the numbers work
Okay.
and the cash flow makes sense,
Uh,
that way you get more leverage in the long run as
Yeah.
well.
How would you recommend somebody getting into, like, in their local area, getting their roots in with these people? Like, is this just a Google search? Is this word of mouth? Like, what kind of things are people searching for since so much of it is happening behind the scenes? Just asking other business owners, friends and family, looking for, investors in the area. How do you recommend people start making those connections?
Well, it's challenging, quite
Mhm.
honestly, in the commercial space. I mean, if you go to buy a personal home, it's fairly easy.
Yeah.
Everyone knows a residential real estate agent
Mhm.
that they work with, and there's a lot of really good ones, a lot of trusted ones. So you ask your friends and neighbors, and they're like, okay, yeah, I worked with, Steve or Mary, and they did a great job. So you call Steve and Mary, and then a lot of times Steve and Mary will connect you up with a preferred lender that they have a good relationship with.
Mhm.
And commercial is different. It's hard to ask your friends and neighbors about buying a building because
'Cause
most
not
of them
everyone owns a
haven't
business.
done it,
Yeah.
right? Yeah. Yeah. And the other issue is that when you do that, you're limited to sort of the local market
Okay.
area. And we like to source funds nationally because
Uh,
it varies. It changes every day. I mean, look at the financial markets, right?
totally.
The commercial market is like that as well. And so I would suggest that you get our book
Yeah.
because it gives a pretty good outline and overview of the whys, the opportunities, the risks, the
Yeah.
opportunity costs, and then the type of loans that are out there, and then the process that's involved and how do you find it? Where do you start? Because I really think on commercial education is where you really need to
Totally.
start. And you can, of course, go to Google and you
Mhm.
can get bits and pieces of it, but I don't know that you're going to find a compendium, where it gives you an overview. Like the book I wrote is not Moby Dick. You're
Mhm.
not, it's You're going to sit down with a cup of tea or coffee on a Saturday morning in about an hour, hour and
You're
a half.
taking a class basically.
Yeah, and you read it and
Yeah.
you're like, okay, now I have a pretty good understanding of the
Okay.
questions to ask, the
Mhm.
things to be considering, the overall process. So you're not walking in blind. So then if you do go talk to your local banker or you reach out to a
Mhm.
commercial agent, you have a sense of at least, you know,
The
what's going on.
lingo, what to expect, things like that. Okay, I'm sorry if this is a stupid question, but tell me exactly what it is. Obviously, you've written this book, you have
Mhm.
your podcast. Are you doing this like financing? Like, what is your business? Is this
Yeah.
something that people can reach out to you being that next step, or are you just teaching people how to do this?
No, we teach because we want an educated client base.
Yeah.
So what we do is back to your question about what should they do locally? Should
Mhm.
they Google? Should they talk to friends, relatives? What we think you should do if you're in business and you're growing your business is that you should stay focused on growing your business,
Yeah.
building your team, growing your top line revenue,
Mhm.
mitigating your expenses and bringing home more money and stay focused in your lane.
Yeah.
Um, if you're self doing your financials and you're a DIY person and all that, you can get our book and we give you the framework and you can go try
Totally.
to execute it.
You're not trying to hoard this knowledge to your
The issue though, but here's the issue is the cost to your business and the
Mm.
cost of not knowing the pitfalls. Like for instance, like on the SBA, there's two different loan programs. Well, one of them, based upon how much equity injection you make, is going to require you to pledge your personal residence if you
Mhm.
don't have enough. Another one doesn't require that.
Okay.
Some programs and lenders will require these things called covenants, where they're going to make sure that everything you do, again, every year you have to check boxes. And if you don't check boxes, you could be in default. Or if you happen to get behind on other bills, even though you're making that one on time, then now you're technically in default. So those are the things you don't really know until after you sign the paperwork, and
Yeah.
probably not even then
Yeah.
because, you know, you're signing a lot of paperwork.
Yeah.
So
Mhm.
we clients come to us because they're like, okay, I'm thinking about buying a building. Does it
Mhm.
make sense? What would I qualify for? What's the process and all that? And so that's what we do. We have a 4-step process. We investigate, we ask a lot of questions
Mm.
as
Wow. Yeah.
because we want to uncover any potential landmines or issues that may come up downstream.
Yeah.
Like, for instance, you forget to tell your husband that we're buying a building and you
Mhm.
get to closing or a week before and he has to sign the documents as a
Mhm.
guarantor potentially.
Mhm.
I've seen that happen. It doesn't go
Mhm.
well. You know,
Mhm.
these are things that you need to be advised on early. And so you can address before you get into the process of finding a piece of property, putting earnest money down, because once
For
you put
sure.
earnest money down, you generally have a financial due diligence period that if you go beyond that, you lose the money. So we investigate, we underwrite before
Okay.
submitting for funding. Then we come back and advise and say, okay, Lisa, based on the goals that you have, your current
Mhm.
business, where you think you're going, any potential issues that you may have, here's how we can mitigate them. And here's 3 or 4 options that
Mhm.
are in the market writ large, from the 504 to the conventional or whatever.
Okay.
And now you,
Yeah.
right? And so now you understand how much building you can afford, what's involved, what are the pluses and minuses. So now you guys can make an intelligent, informed decision. At that point, if you so choose, we can help advocate and help place the funding and work with the funding agent on that as your intermediary. So we're literally representing you to the lender and we're sort of filtering. So you're not having to get blindsided with
Totally.
calls and
Yeah.
questions and all that.
Knowing someone has combed through this and has nothing to gain or lose by sharing this information with you.
Right, exactly. So you can do your thing and then we can be
Mhm.
looking out for you and advocating for you. And that's what we do.
Awesome. And how is that like contractually lined up? Is that just like worked into the sale? Is that like one-on-one consulting that people are seeking you out for? How does that work, I guess?
Yeah,
Bill.
we have an engagement. We don't
Okay.
charge very much upfront for that. It's a
Okay.
one-time engagement fee that we charge.
Okay.
We
Yeah.
invest a lot. We're into your financials, we're reviewing
Totally.
everything, connecting up with your accountancy with your permission, of course, and
Yeah.
doing all that. So basically what that does is that recaptures our cost and a little bit of profit.
Awesome.
We hope at that point that if it makes sense for you, whether right away or maybe 6 months or 12 months, because at that point we have an ongoing relationship. We don't ask for any more
Totally.
money.
Yeah.
That you say, hey, we want to move forward. We find a business that we can help facilitate the funding. And if so, then we generally get paid by our investors on that if we
Awesome.
put funding together, or you can pay us as well. But most of the time they pay us. So it's just kind of the
Awesome.
relationship we have.
Yeah, that makes perfect sense. I didn't even realize that that middle person existed because my process so far, I have been working with a real estate agent and it hasn't seemed like the right move yet. And the real estate agent that I know, he does do a lot of commercial, but he does a lot of residential too. I live in a small town in
Mm.
central Illinois, so I don't know if that's more the norm, is there's just a few people really in the real estate space, or if that's something to continue to dig even deeper and find where all that is happening behind the scenes. But it's fascinating. I've learned a lot. I really appreciate it. I can put all of your information in the show notes. What's the best next move for people if they want to learn more from you?
Yeah, absolutely. They can go to our website, ownyourbuildingnow.com.
Awesome.
Ownyourbuildingnow.com. Can pick up a free copy of the book we wrote,
Sweet.
and we print it and mail it. So we charge you like
Fair.
$6.95, right, to cover the
Mm-hmm.
cost. And I'd say get that and read it. If you're in a position where you're seriously at a point where you want to go deeper on this now and you want to have a conversation, you can schedule we call an ownership strategy session. We don't charge anything for that.
Cool.
Just an overview to find out, okay, kind of where you are, check some boxes. Okay, yeah, we think this could make sense, or no, you need to get X, Y, and Z done before you
Okay.
think about that. And so we can set that up with me or my team.
Okay, amazing. Well, I think I have everything I need via email from your assistant, but if I think of anything else, Paul, while I'm writing up the show notes, I'll reach out to you and I'll let you know, and we will have all of that listed down below for everybody listening. Thank you so much, Paul. I've learned so much. This has been so insightful. I really appreciate you coming on.
This was great. It's a lot of fun. Great questions. Thanks.
Thank you, friends, for listening, and I will talk to you all next week.